Hi there, welcome to Kneppy Invests. It is the middle of July, one of my favourite times of the year because it is Appendix 4C season, comes 3 or 4 times a year. And one of the reasons why July is my favourite of the Appendix 4C months is it's closely followed by August. And in August, we start to see the main financial reports, full-year reports being released by most companies on the ASX. Not all of them. Some companies do release half-yearlies, and some companies report outside of the normal reporting season that we have. For instance, New Zealand companies. My mission for this July, and we'll see if it lasts into August, and I'll create another mission in regards to the full year and half-year reports that are released next month. But my mission for this Appendix 4C season or month is to create a video on every single company that releases an Appendix 4C and provides us with an operational cash flow positive quarter. So not only non-mining companies which release Appendix 4Cs, but also mining companies which release quarterly cash flow reports. And the reason I'm doing that is simple. The best type of small cap companies to invest in are those companies that are operational cash flow positive. And this is the 20-year returns from 2001 to 2021, comparing small caps companies that are operational cash flow positive versus the benchmark and versus those small cap companies that are operational cash flow negative. And the returns are quite different. For those companies that are operational cash flow positive, you see an 872% return. The benchmark is 323%, and operational cash flow negative small cap companies have a return of -5. This is why I'm focusing on those companies that are operational cash flow positive. Today's video will be the third quarterly report I've done. I've already completed 2, one on XREF and Phoenix, 2 companies I do own in my portfolios. Have a look out for those videos. And we are starting to see Appendix 4Cs and quarterly cash flow reports come in a little bit more frequently now since we're in the middle of the month. And I do have 3 further videos that I have to do. And those will be on Self-Wealth, Drone Shield, which was a bit of a surprise, and my favorite so far, Spectre, which is a company I've owned for quite a while, a very small cap company, and is now operational cash flow positive. The focus of today's video is on a company called V. This is a Singapore-based financial education technology company operating under the name VI, not VEE. V has an app that crunches traditional financial data and simplifies the complex stock analysis and decision-making process. Seems like the sort of app that a lot of us would be interested in. I actually did download the app simply because of that reason. I've had a little play with it, not really the sort of app I would be interested in, but just because I'm not interested in doesn't mean you may not be. So do recommend just downloading the app, maybe having a play with it. Maybe the sort of the app that you would be interested in. I haven't done a lot of research about what else this company does. Have a look at their annual report that they did release in June, about start or middle of June, and they do go into much greater detail about what this company does, and maybe even have a look at my first video that I did release about 2.5 months ago, or maybe just download the app and then just have a play with that. The ticker code for V is 8VI. When I did the video about 2.5 months ago, the market cap of V was $103 million, which did seem a little bit cheap, and it seems like the market has discovered this company in the meantime, because the market cap has grown from $103 million to a current market cap of $226. We'll have a look at the chart for the reasons why their share price has exploded, really exploded over a week period in regards to some news flow from the company. Enterprise value is $205 million, so they do have a little bit of cash on hand and no debt or very little debt. Revenue for the last financial year 21, $25.2 million, and operational cash flow positive by $16.6 million, which means we can calculate one of my favorite metrics, which is enterprise value to operating cash flow, and we do get a number of 12.3. So this is probably reasonably valued at these prices, and that's regardless of the growth of the company. And when you do take the growth of the company into play, you might say that enterprise value to operating cash flow could be on the low side because V is growing at a fairly good rate. Before we look at the June quarter results for V, let's just go back to the March quarter. And the March quarter was actually their final quarter of their financial year 21. They have a little bit of a different reporting season than a lot of our companies on the ASX, probably because they're Singaporean. So this was the final quarter of financial year 21. It was quite a stellar quarter. $10.7 million of receipts in Singapore dollars, which the exchange rate between Singapore dollars and Australian dollars, there's not much difference. So you could just translate that to Australian dollars. And they were operational cash flow positive by a high amount, $5.2 million, and finish a quarter with $18.6 million of cash. One of the reasons why this company could have been good value, maybe because they are Singaporean based or Asian based. There is a little bit of not anti-bias, but a little bit of bias against Asian based companies, particularly Chinese companies, because we did have quite a few Chinese companies list on the ASX and there were problems with those listings. So now let's have a look at the June quarter results and see if things have improved. Operations did go backwards a little bit for V during the June quarter. Receipts for customers went from over $10 million to $8.9 million. And in the March quarter, they were operational cash flow positive by over $5 million. Now it's only $3 million. When you take into account also the financing and investing activities, they spent $4 million in investments and borrowed $1 million. So when you take into account operating, investing, and financing activities, they only grew cash by $400,000 during the quarter. When we look at the receipts history for V going back to the December quarter in 2015, just want to point out that we should ignore the period from December 2015 to April or March quarter 2019, because that was really a different company. This company did transform into what we know of them today. So when you look at the receipts growth or history from the March quarter 2019, we do see significant growth in the company's receipts over the last 2.5 years. In fact, it's been growing every single quarter apart from the last quarter. So hopefully this is just a little bit of a pause in the receipts growth history of this company. They've been growing receipts at a compound quarterly growth rate of 21% since that March quarter in 2019. That's pretty significant growth for a company's receipts. If you saw a company's receipts growing like that per year, you would be impressed, but this is per quarter. Onto the daily chart for V. This goes back to just prior to the COVID-19 financial panic. Not a lot of interest in this company back then. In fact, the share price was around 20 to 40 cents. So if you were a shareholder at that point in time and you've held strong since then, the returns on this company have been quite significant because the current share price is $5.17. You can see the share price is quite volatile. You can see rapid rises in the share price and then rapid drops in the share price as well. So if you don't like that volatility, if you can't handle that, this is maybe not the company you should be holding, because we will see in the future the share price rise quickly and then drop quite quickly as well. We have seen that at least 3 or 4 times in the past 9 months. Go back to October last year, share price rose quickly from 60 cents to $2 in about a month, and then fell from $2 in $1 in about 6 trading days. Recently, during the start of June, around the 9th of June, share price rose 120% in 5 trading days. That was based off some news in regards to a secondary listing in Singapore. Share price rose from about $2.80 or 90 to a high of $7. Share price has been pulling back recently and has dropped to current share price of $5.17. A very healthy pullback in my opinion, because we did see significant volume coming into the trading of V during the time where the share price did rise quite quickly, and that volume has completely pulled back. So those day traders have not become, or say have become less interested in V, and that's actually a good thing. When they released their March quarter Appendix 4C on the 26th of April, share price did rise 35%. It was an impressive Appendix 4C, but you can just see on the chart that doesn't look quite impressive, because the days leading up to the release of that report, the share price actually did pull back, and that rise of 35% was just, say, going back to the share price, it was before that little pullback before that date. And then during May, the share price just went sideways. So it really wasn't until this news flow about their secondary listing in Singapore that got the market interested in V. And that is all I have for this video on V's Appendix 4C June quarter financial year 22 performance. Hope you've enjoyed this video. If you do have any questions about this company or any other company on the ASX, make sure you leave a comment in the comment section. I'll answer anything you have to say as soon as possible, hopefully within the next week or so. The last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it. Have a good day. Talk to you later. Bye.